Okay, welcome. Hello, everyone, and welcome to today's roundtable hosted by the Insurance Development Forum in partnership with the Climate Policy Initiative. My name is Ekoswehi Iyahen. I am the Secretary General of the IDF, which is the acronym we often use to describe the Insurance Development Forum. For those of you who are less familiar with the IDF, I will just give a little bit of a description of our work so that you have some context to the discussion that we are going to be having here this afternoon, morning, or evening, depending on where you are. So the IDF is a public-private partnership led by the insurance industry, co-chaired with the World Bank and the United Nations Development Program. It was launched in 2015 during the COP21 Paris meeting, with the goal of really trying to foster greater collaboration between the insurance industry and also the public sector to explore how can we optimize and extend the use of insurance and risk management capacities tools that exist within the industry to support greater resilience of households, communities, institutions, governments, given the disasters that we are increasingly seeing occurring, and also the associated economic shocks. So central to the IDF's mandate and work is really to see how can we foster collaboration to address the protection gap. It's really heartening to have all of you here for this roundtable, which is the first in a series of roundtables that the IDF will be convening through the course of the year. And it's really, or the roundtable is really structured to explore a theme that I think is very timely and relevant at this point, and part of why we are also gathered in this way today via video, which is the nexus between COVID-19, the significant and profound economic impact that we are seeing as a result of this, the impact of climate change as well on many countries, communities, etc. And within that, trying to figure out what is the role of insurance in supporting the response, recovery, and the longer term redevelopment and also financing and resilience of our societies. And so the roundtable is really meant to provide a platform where we can interrogate this theme from a variety of angles, but also importantly, I think, to bring to this platform leaders who are at the helm of institutions, both within the public and the private sphere, to get a better sense of what are the challenges that they are currently trying to deal with. How have they sought to emerge or handle or cope with these challenges? If it's COVID, if it's climate change and the impacts that we are seeing and what we expect into the future. But importantly, also to tease out from these conversations, what is their vision in terms of what our future should look like in terms of resilience and the role of insurance? What are the emerging solutions which we think are out there that can be scaled to actually have the kind of impact that we want to see? So the roundtable series is, yes, a discussion. We want to have very frank conversations, robust exchanges, but importantly, it's also about trying, as I referenced earlier, trying to find out what are the real solutions that are out there. The insurance industry has a lot of tools, a lot of expertise that sits within it. How can we leverage that to develop even more relevant, meaningful, and appropriate interventions, given the kind of expressions of concern that we are seeing from various corners across the globe? And how can we do that and foster that collaboration between the industry and also the public sector? So I'm really hoping that, it's good to have you at this first roundtable, but that you will be part of a journey that the IDF will also be undertaking over the next few months through these roundtables to really explore this issue in greater depth, technically, but also from a policy perspective, because it will importantly also influence the work of the IDF and our members going forward. And so with that introduction, I will now just give a few remarks in terms of the logistics around this that everyone needs to be aware of so that we're all on the same page. First and foremost, just to say we've had an overwhelming response to this roundtable with over, I think, approximately 250 people dialed in from across the globe, from various sectors and backgrounds, really listening into this conversation, and that's fantastic. But unfortunately, we have had to disable the chat function within the Zoom platform. But despite that, we still want to hear from you. So we encourage you to please sign up on the website, the IDF website, www.insdevforum.com, to get further information, in terms of the work of the IDF and our members, but also feel free to tweet as well. In addition to that, the third point that I wanted to make, obviously, is that the session will be recorded. So it will be available for those of you who might want to share this with a broader community or revisit some of the discussion that we will have here today. And with that, I would now like to hand over to Vikram Widge, who will be expertly guiding us through this conversation, through this roundtable, and our stellar lineup, which we have convened to help us really delve into the issues. Vikram is a senior advisor at the Climate Policy Initiative, the partner who we are organizing this session with, but he's also a senior fellow at the Adrian Arch Rockefeller Foundation Resilience Center. Prior to that, he was also the global head of climate finance and policy with the IFC, which is part of the World Bank Group. So just again to say thank you to all of you who have joined this conversation, and also to Vikram, who will now guide us over the next hour and 25 minutes through, I expect, will be a very insightful conversation. So thank you, Vikram.
Thank you so very much, Ekosoe, and hello, everyone. A warm welcome to you from IDF and CPI. Thank you so much for joining us today. As Ekosoe already outlined, today we face an unprecedented crisis in the wake of the COVID pandemic. Governments globally are rolling out plans and cash for economic stimulus and to enhance social safety nets. So it would be prudent to ensure that these actions are also consistent with addressing the other global threat which threatens our very civilization, that of catastrophic climate change. Like the coronavirus, climate change will affect everyone globally, not equally, but on a scale of decades and centuries rather than just months and years. And without taking anything away from the urgency of acting that the pandemic imposes on us all at this time, it does behoove us to look closely at how the lessons and challenges of dealing with the COVID crisis are also useful for addressing the climate challenge. Consideration should definitely be integrated into the economic stimulus programs so that the macroeconomic impetus leading to building resilience against future systemic shocks to society and the financial markets are well taken care of. And we have a window to rebuild our world for a more inclusive, more resilient, more sustainable future. And not doing so would pose a significant threat to a sustainable recovery and also risk propagating future systemic shocks brought about the impacts of the climate crisis. So we need systemic solutions. We are just seeing the tip of the iceberg in terms of what is needed. And we believe the insurance industry has an important role to play in the much needed deep transformation. As many, including Mark Carney in his then role as Governor of the Bank of England, have noted, the insurance industry has a unique contribution to make with its very large pool of capital, over 30 trillion by many accounts, deep risk management expertise, and a long-term perspective. So is the insurance industry playing its role to everyone's expectations? Is it playing it to its own expectations? And can public-private insurance actions be mobilized to ensure the much needed systemic resilience to pandemics, as well as address the existential threat of climate change? And that's what we will explore and discuss here today. So in terms of the plan, first we'll have a virtual fireside chat with the Prime Minister of Barbados about how her country is faring and how her government is managing the impacts of what is happening now and what will happen in the future. Then we will bring in some senior representatives from the public finance and private insurance sectors to discuss and debate the current and future role of risk transfer in insurance. We hope to do this as much as possible as a roundtable discussion, given the limitations of not being in the same room together. One day again soon, hopefully. I will introduce those panelists separately, but for now, let me warmly welcome Her Excellency, the Honorable Mia Amor Mottley, Prime Minister of Barbados. Welcome, Prime Minister, and thanks for taking the time to join for a discussion that has become even more pertinent and addresses a critical, important issue.
Thank you very much, Vikram. It's a pleasure to participate, and I'm not an insurance expert, but I'm going to enjoy this hour and a half, I hope, and share some perspectives with you from where I sit, leading a small island developing state in a region that's been not only on the front line every year with the climate crisis, but now on the front line, of course, with the pandemic, not so much from the public health aspect of it, but in trying to protect persons from the consequences of the public health crisis. The economic fallout has been tremendous. And of course, the Caribbean is already the most tourism and travel dependent region in the world. And to that extent, we've seen levels of decline in revenue and business activity that are apocalyptic, quite frankly, and would not normally have been seen or contemplated by most rational thinking people who would be forgiven for believing that even if there was to be a repeat of the Spanish flu, the average person would have thought that some kind of vaccine or therapeutic would have been more readily available. But the kind of total shutdown of countries that we have seen, and we have also seen where you don't shut down what the consequences are, quite frankly. And that has put us doubly on the front line. But there's a third crisis. The third crisis was the one that was with us for quite a while, and that is the high debt and low growth. And the high debt has come about, and it's a deeper discussion, not for today, but the cumulative impact of reversing the lack of social justice that was the state of our countries at the point of independence meant that the development framework has always commanded a large part of the fiscal resources. And perhaps some may argue more than might have been otherwise supported by the competitiveness of our economies, but nevertheless, that has been our lot in life. And when you consider the extent to which disasters over the years, even when the climate was not as rabid as it is, and the crisis was not as rabid as it is, you still had periodic hurricanes that literally set back countries quite a few years. And that cumulative impact literally saw the debt going on and on and on. And when you do have countries that have made significant progress, then you're penalized by being removed from access to concessional funds. So that you literally have a virtual cycle that keeps you within the grips of the reaches of poverty, even if not in poverty, because you're one or two steps away as a result of your vulnerability. It is against that background that insurance obviously becomes the question and order of the day. And the question is, people will ask, do we believe that we are underinsured? Probably not as a country. And we, since we have come into office, have taken some decisions that have better prepared us. The truth is that the first thing we did within a week of coming to office was to indicate that Barbados' level of debt was unsustainable at 176% of GDP, and that we were going to be restructuring our debt and going to the IMF. In so doing, we took decisions in the restructuring of our debt that has led now to the fact that 80% of our debt have natural disaster clauses. I kick myself every day for the last 4 months for not insisting that it be natural disaster and pandemic. But nevertheless, it was natural disaster, and that's what it is. But what it means is that we basically get an automatic grace period of debt service for 2 years, which in our instance would create the fiscal space of about just under 20% over a 2-year period of GDP. At the same time, we also took some decisions with the rest of the region to expand our parametric insurance through the CRIF. And even though we're trying to supersize the institution, I think all of us know that the CRIF is just an immediate stopgap in the event of something happening, but its capacity cannot lend itself to the kind of scale that we will need in the event of real emergency. And finally, we've tried assiduously in the last 2 years to build up our fiscal surpluses and to increase our foreign reserves, which is absolutely critical because like now with the pandemic, we have to go into some aggressive capital expenditure. Luckily, our reserves have moved from 210 US to over 1 billion US in the course of just under 18 months. And that has given us tremendous confidence, as well as others tremendous confidence in our ability to be able to hold our own in the initial stages of the pandemic. People ask, well, what happens if a hurricane hits? Well, that's where the natural disaster clause comes in. And it gives us a little more confidence as Barbados. Regrettably, this is not the fate, however, of most Caribbean countries. Most Caribbean countries face high debt. Other than Jamaica and Grenada, they haven't really stuck to a strong program in terms of the restructuring of their debt. There are some countries who are going to be facing some very difficult moments, and therefore, you know, there's almost a feeling on the ground that as difficult a prospect as it is to live with the Sahara dust, people are actually praying that it stays as long as it does, because that will keep the hurricanes away for now. That's a hurricane antidote for the moment. So where does that leave us? Our experience with climate change is different, we believe, from the insurance industry's view of it. The insurance industry is largely based in large and temperate developed countries. For you, for many of the persons there, climate change is a slow onset, maybe something that may be of interest in 20, 30, 40, 50 years. At the United Nations for the last 2 years, I've had to remind people that for us, 1.5% spells 1.5 degrees, increase in temperature spells doom for us, and not simply 2 degrees that everybody seems comfortable with living. That is not our experience. Our experience is that the crisis is present. It's not part of our future. It's part of our present situation. And what is even more, when you start to look at it, it is going to be difficult to pool risk in this region, largely because all of us are facing the ravages of the same risk. Other than those on the South American continent, and when you look at them, Guyana and Suriname, etc., they are facing serious risk to floods. Trinidad, they may not get hurricanes, but they get far worse floods than any of the rest of us in the Eastern Caribbean island chain get. In addition to that, you only have to look at the size of the hurricanes when you watch television and the weather news, and you begin to see that the mass of the hurricane literally dwarfs the islands that they go over. And what is even worse is that Hurricane Dorian showed that the notion of a hurricane sitting on top of an island for a day or 2 or 3 is now part of our reality. And it's not some science fiction movie that will bring that kind of reality. And had Dorian passed over Bahamas, it would not have done half of the damage that it was able to do. But it was sitting on top of the Bahamas for that 36 to 48 hours that really made the biggest problem. In addition, we all know the story of Dominica. You can't want a more heart-wrenching story. You had Tropical Storm Ophelia that wiped out 45% of GDP. Then 4 years later, you had Erica. I remember when Erica was coming, it was a tropical storm as well, but Erica devastated Dominica with the rains and the mudslides and all of the various things, and that took up about 96% of GDP. And then 2 years later, when you thought you couldn't take any more, Erica takes 226, not Erica, Maria takes 226% of Dominica's GDP. And Dominica is still reeling today and having to confront the pandemic as well as the risk of further hurricanes. The other part of the equation that's not there, of course, is drought and sargassum weed, both of which act as a trigger for the interruption of both normal activities, public health, safety, and business interruption with respect particularly to the sargassum weed in coastal communities, because if you're in the business of tourism and your beachfront is full of 3, 4, 5 feet of sargassum weed, you can't do anything. And even though it is just a thin film on the ocean, when it comes in, with every wave coming in, every few seconds, overnight, you can build up 3, 4 feet of sargassum weed. And this goes from the Southern Caribbean right through to the Gulf of Mexico. But yet, because everything else is sucking the oxygen out of the climate crisis discussion, nobody's paying attention to the impact of sargassum weed, because that's just a daily irritant. It's like the chronic NCD of climate crisis, whereas the hurricane is the supermassive heart attack. In addition to that, we are really recognizing that we are going to need to be able to share with people why redundancy is not immediately available to us and why resilience, therefore, is so critical. Where you're going to run to on 166 square miles, where you're going to run to on 500 square miles. This is not like parts of Africa or parts of the US. In fact, I put it a different way. What is the one country every year that gets hit by a hurricane? Every year. It's not a Caribbean country. It's the United States of America. But what varies is the states. Is it Texas? Is it Louisiana? Is it Florida? Is it Virginia? Is it the Carolinas? Is it New York? I mean, it's going right up. And that is the reality. And I wonder whether in looking at it, whether we should not be treating to the states as opposed to the federal entity, but the state governance of the United States of America, in order to be able to see how we can expand scale, because you're not going to get much traction at the federal level, but there's absolutely a lot of opportunity for scale and discussion. And the good news is this: in the same way that a hurricane doesn't hit every Caribbean country every single year, and I know insurance, you like those kind of odds, it also does not hit every state in the United States of America every year, even though it hits the United States of America every year. So I wonder whether, and I'm not an insurance person, as I've told you up front, but I wonder whether the deconstruction of that whole equation does not admit of opportunities that otherwise would not exist. And it's the same thing with Mexico. And it's the same thing with the other Central American states. Because at the end of the day, look at the trajectory of a hurricane. It's either going to go west and bend back down towards the Gulf, which means that it's going to have to go over some form of land at some point in Central America, or it's going to stay on the eastern seaboard, and it's either going to turn right low before it gets to Bermuda, or it's going to go right up the coast as far up as Canada and then turn right into the Atlantic. Now, when you begin to study that, are we having a sufficiently global perspective on how we pool the risk and how we disaggregate in order to be able to create the best possible opportunities for our countries and for our investors? I think all of us agree that we need some new innovative types of solutions. The first major thing is perhaps a pipe dream, but call me a dreamer. I much prefer to have that label than a cynic. And that is, can we activate the Warsaw mechanism for loss and damage? Because there's something perverse about asking the countries who did not cause these circumstances to come about, who are the least part of the equation, but who are on the front line of the battle to be hit first. And should we not be seeing the developed countries who have contributed to the carbon house gases increasing, shouldn't they not be the ones who be responsible for paying the premium for the developing countries, even if not in full, in large measure, as part and parcel of the development compact that accepts responsibility? You know, I talk all the time about moral leadership, and moral leadership is no different from equity in the practice of justice. And in both instances, you come with clean hands. And if you are the person who has caused the problem, then you ought at some point to accept responsibility. And in this George Floyd moment of reparations and discussions and getting justice for people, I wonder if there may not be a small chance that we can get people to accept that the polluter pays principle has to extend within the context of insurance and the acceptance of the contribution towards insurance premium for those countries who are facing circumstances that, had it not been for the behavior of those other persons, would not be facing them today. If that doesn't happen, the other question is, how do we look at resilience to avoid future disasters? we all know that the research suggests that every dollar that we spend in resilience saves $7 in rebuilding the cost after the disaster. And to that extent, therefore, the question is, can we afford a more extended payment of premiums? And perhaps can we switch maturity dates from 10 years to 50 years? And the interest rate, can it then be lower? And what we've been doing, Professor Prasad and others and Waitok have been looking at the whole notion forming of resilience insurance bonds. And not just for Barbados, but once again, everything I speak of today, because we are the lead country on the CARICOM single market and single economy, I'm speaking of in the context of the regional economy, because we accept that Barbados itself may be a little too small. I've already spoken about the natural disaster clauses. I'd love to see them replicated. Grenada has some. Barbados is the largest issuer of them now. I find it an amazing thing, and I'd love to hear in this fireside chat and from others, why people are so intent on risking disorderly unraveling of contractual obligations. I'm a lawyer. And you can either have a orderly restructuring of obligations, or you can have a disorderly unraveling. And that is why I favor our approach with the natural disaster clauses, because what it does is that it creates certainty for both parties. Now, when you don't have these clauses in, either for natural disaster or, as we will, I'm sure, see going forward for pandemics, it creates that disorderly unraveling. So I'd be interested to hear why there is that reluctance. And then we need to look at agriculture and food security and appropriate forms of insurance for crop insurance and livestock insurance, because one of the untold stories in the Caribbean is the extent to which farmers are affected on an ongoing basis, now doubly between the drought and hurricanes and floods. And you know, living in this world today requires an extraordinary level of courage and conviction and hope in order to avoid the apocalyptic moments. But I share some of those, and we can come back again and talk. So I hope that I've been able to set some context.
Prime Minister, it's fascinating. It's just, it's like living it live. And for those of us, and I'm not an insurance expert either, which is why I think I'm here to maybe try and moderate a discussion. But I think, look, I mean, you touched upon national finance or public finance, you touched upon science, on the insurance, its abilities or its shortcomings, technology, geography. You even talked about probability, politics, innovation in capital markets. I mean, ideally, we'd love to keep hearing about all these things, maybe even a masterclass for other heads of states at some point. But given the interest of time, there are a couple of things I'd quickly like to explore with you based on what you said. This whole issue of investing in resilience that results in future savings, if you will, post-disaster. The economic and financial system does not currently reward investment in resilience in the way it should and the way it probably can, in spite of all the debt issues that you talked about, particularly in the region. And you said Barbados may not be underinsured, but that's not true for a lot of the other Caribbean neighbors. I'm just curious if you think insurance could play a role, not necessarily in its usual indemnity or parametric approaches, but are there any other creative things that you feel, given all your experience and knowledge, that insurance could play a role? Did you explore insurance, for example, as an alternative for the Grenada clause, the hurricane clause that is in your national bonds? Could they have played a role? Could they have covered that debt service cheaper than investors perhaps did? I'm just curious. I'm not the expert here, but I'd just like to hear from you. How could insurance help you, if at all it can, reap the rewards of investing in resilience?
Yeah, I think that the issue with insurance with the underinsurance has more to do with our private sector. I mean, at the state level, I don't believe we're underinsured. because we've created the fiscal space to allow us to meet our obligations in the event of a natural disaster. As I said, 20% of GDP is appreciable. Although we know, and for our own case, Barbados is on the very eastern side of the Caribbean chain. So it means that hurricanes will hit us first. And if we get hit with a category 5, I would imagine that that is a 1 in a 500 year thing, because it's always, we're likely to be at category 1, category 2, category 3 would be unheard of. So at the sovereign level, we think we have enough to start off with at the very least. But I think there is an issue at the private sector level. And one of the things that bothers me is that with the price of insurance premium increasing because of the increased activities of claiming in the last few years, it's becoming unaffordable for a number of private sector entities to be able to purchase insurance as a part of their business operations costs. But then they're constrained by the fact that if you want to borrow money, you're not in a position to borrow that money because you can't pay for your insurance premium, and therefore the bank is not going to lend you. Now, we feel that there may be some opportunity for a public-private partnership with respect to the whole issue of the underinsurance of the private sector. And there may be some role for the development finance institutions to also assist. But as I said, it's a multiple thing, and it comes down ultimately to the politics of the moment. Will the developed world do right by the people who it is injured? If there were private parties, they would have to under the law of tort. At the law of international, in international law, they will get away because as much as we hate bullying and as it relates to children, we admit of it between sovereign entities. Secondly, having said that, can we find ways of government subsidizing as well as, and that comes back down to the macroeconomic fundamentals and the fiscal space in a country, and can we find ways of the development banks taking portions of the risk, even if the country takes the first portion of the risk? We've been trying, for example, to create a tourism development fund as a result of the pandemic. And one of the things we've said, we've gone to the Inter-American Development Bank, we said, look, as the government of Barbados, we'll take the first 10% risk. And if you can take the next 45%, so that what is left is more palatable to those in the market to come to the table in order to do what they have to do. Maybe we can replicate that with respect to the construct of insurance premium going forward. I don't know. But what I do know is that there's need for a dedicated study as to what are the opportunities and realities, because small states have different realities. As I said, redundancy is not something within our vocabulary.
I mean, look, you've raised so many interesting issues. You have challenged the insurance industry. You've challenged donor governments, if I can put it like that. You have put out an offer to cooperate and work with development finance institutions. Interestingly, I pick all of them because the next part of our discussion is with a group of accomplished and senior professionals from exactly these communities. So, Prime Minister, we really appreciate that you'll stay on, and I will certainly use your presence to validate and challenge what our panelists have to say. I will try my best to have them incorporate what you said and react, agreed from a global perspective, but what you talk about in terms of relative size of impact versus GDP, the debt burden, the 2 degrees versus 1.5 degrees that is so imminent and real for Caribbean and other small island states. Hopefully we'll be able to integrate all of that and more into discussion. So thank you again, Prime Minister, and we hope, and please feel free to come in. I will turn to you as the opportunity arises, but feel free to just, if you don't mind raising your hand, catching my attention, and I will come back to you.
That's fine, Vikram. I want to thank you, and I want to thank Ekose, and I also want to let you know that at this point, last week I did something for the IDB, and this same issue came up, and I've suggested to President Moreno that what we really need is a blue ribbon panel of himself. He's about to retire at the end of September. Perhaps Bill Clinton and a distinguished Caribbean citizen to constitute a blue ribbon panel to be able to work with the private insurance companies and the governments and the development financing entities to see how we can put this matter on a steady trajectory, because right now it is nowhere. And Barbados held an insurance colloquium in November last year because this is a matter that is of grave concern to us. So thank you very much, and I'll listen. I'm very anxious to hear some of the solutions. And I'd like to hear people's response to the natural disaster clauses and ultimately a pandemic clause. Thank you.
Fantastic, Prime Minister. And clearly you've laid out something. I mean, it seems IDF's role gets highlighted, and all credit to Ecosway and, of course, her leading governors in terms of Denis and Rowan, all of who will show up later in terms of what we can do to facilitate what you're suggesting.
No, we're very, very proud of her. So thank you, Ecosway.
Right. And with that, thank you again, Prime Minister. And it is now my pleasure to introduce, in the order that they will first speak, Anshula Kant, Managing Director and Chief Financial Officer of the World Bank; Denis Duverne, Chair of AXA Group and also the Chair of IDF's Steering Committee; Ingrid Hoven, Director General of the Federal Ministry for Economic Cooperation and Development, known to many of us as BMZ, from the Federal Republic of Germany; and Christa Schwimmer, Head of Corporate Client Management at Munich Re Group. Welcome all. Hello. You've all heard the Prime Minister, so I'm hoping all of you are now churning to integrate some of what she said into how you might react to the issues she has flagged as both pertinent and very urgent, clearly. But let me start with Anshula. Anshula, we heard her, there was a vulnerable country and the region, but the numbers globally are staggering, given both the impact of COVID as well as climate change. The multilaterals led by the World Bank Group and others have mobilized a tremendous amount of money to help with the immediate impact. And we all applaud the quick action. But we also all realize, as I said in my opening remarks, that if recovery is not planned to be green, resilient, and inclusive, and I think the word inclusive starts to take a much wider meaning based on the PM's remarks, we are going to lose the opportunity to address the looming crisis. And a recent Center for Disaster Protection Analysis also highlighted an issue which I think the Prime Minister herself raised, and that is loans are such a large overall source of financing in a disaster. And so finance to recover from a disaster tends to go to those who can afford to take the loans. And she talked about multilaterals having a larger risk appetite. As an ex-multilateral banker, I have my own views about that. But please tell us, how is the World Bank structuring its pandemic-related lending so it leads to actually building the resilience against the future systemic shocks to society as well as financial markets? And do you believe that insurance is attractive enough a value proposition to be an integral part of some of this financial structuring when compared to other types of products like loans?
Thank you, Vikram. Can you hear me?
Yes.
Yes.
Loud and clear.
Okay. Thank you, Vikram. I'm honored to be part of such a distinguished panel, and listening to the Honorable Prime Minister's remarks, they resonate actually very closely with the World Bank's view that COVID-19 pandemic has posed severe and disproportionate risks for small island developing states, as also for the poor and vulnerable across the globe. So to address these risks, the World Bank has customized a cross-cutting approach to building resilience. And I'm talking more in terms of our approach towards the small island developing states. And this approach actually includes responding quickly to health emergency, of course, providing social protection to vulnerable groups and financing public works for job creation, and providing technical assistance supplemented by financing where possible. Now, it's not always possible, but where it's possible, depending on the income levels of the different countries, we do support financing for fiscal sustainability as well. Above all, we have strengthened our disaster risk management for Caribbean small island developing states, as well as for other states exposed to disaster risks, by making an instrument called a catastrophe deferred drawdown option. It's called the CAT DDO in World Bank parlance, which is a key platform to help countries absorb the fiscal shock of a potential future disaster. So the CAT DDO is a contingent financing line which provides immediate liquidity to help countries address natural disasters, including health-related events. It is one of the most important instruments that we have for disaster management in our toolbox. It serves as immediate financing, as I said, and while funding from other sources such as bilateral aid or reconstruction loans may take a little more time. CAT DDOs are accompanied by programs to strengthen disaster mitigation response, build country capacity, and reduce disaster impact before they actually strike. And for small island developing states, this should surely include recovery through economic diversification. Now, this is important, economic diversification will lead to more resilience. And this will, of course, depend on how we can harness the local opportunities available in the region. Let me now expand our discussion from the Caribbean to the entire world via the World Bank, actually. So as per our latest forecasts, in the baseline scenario, global growth will contract by 5% in 2020, and which will push more than 70 million additional people into extreme poverty. And if you recall, extreme poverty for us means we define it as $1.90 per day per person. In the downside scenario, these numbers could be as grim as contraction of up to 8% and additional people pushed into extreme poverty by 100 million. Given its mission, World Bank Group has been playing a unique and catalytic role to help countries address the impact of COVID-19. And let me say this, that we have been very nimble. Programs in FY20 were rapidly refocused towards helping client countries meet the dual challenge. Now, I'm talking about the dual challenge, not the immediate challenge alone, which now confronts our client countries. On the one hand, they are addressing the health threat from COVID-19, its social and economic repercussions. On the other hand, we need to maintain a line of sight to their long-term development vision. This is important. And our support spans all three stages. This includes relief, restructuring, and resilient recovery. The approach aims to address both the immediate impact and seize opportunities to rebuild better through policy reforms and financial tools to strengthen resilience against future shocks, as you rightly mentioned. And just a small bit on how we view climate change. We have been addressing climate change through our financing over the past few years. And in the last fiscal year alone, 31% of World Bank financing contributed climate co-benefits, and the group committed nearly $18 billion to climate-related investments. We have surpassed our targets in this regard for second year in a row. And going forward, the World Bank Group will invest and mobilize $200 billion in climate-related financing between 2021 and 2025, doubling what we did in the previous 5 years. Based on country demand, we will continue to embed aspects of green, climate-friendly recovery into stimulus packages. Now, Vikram, to your question about disaster mitigation largely being funded through loans, let me share briefly with you that World Bank financing is extremely inexpensive, and it is accompanied by technical and policy advice and analytical support. The bulk of IDA resources are provided on highly concessional terms with no interest and with extremely long grace periods and maturities, up to 30 or 40 years. And obviously, as repayments are lower and spread over a very long period of time, IDA loans are easier for borrowers to service and repay. Now, this is the important point, and it was raised by the Prime Minister herself, that over half of IDA 19 active countries already receive all or half of their IDA resources on grant terms, which carry no prepayments at all. Such grants are targeted to the low-income countries, obviously, which are at high risk of debt distress and fiscal distress. Similarly, for IBRD, if you look at the IBRD's loan pricing, it is significantly lower and for much longer tenors as compared to commercial creditors. Moreover, recent IDA graduates, blend countries, small states, and countries experiencing fragility, conflict, or violence receive IBRD's lowest pricing. So I would say, that World Bank Group, is not only offering extremely concessional financing on very long terms, on grant terms, but more valuable still is the technical assistance and advisory that we offer our client countries. Now, to your question of partnership with insurance company, whether they offer value or it does not, I think obviously it offers huge amount of value. And we have been working very closely with insurance companies since 2007. And the World Bank has, as you know, been facilitating natural disaster risk transfer transactions for sovereigns, subnational SOEs, other international organizations and funds. Our work benefits both our clients and insurance market. And let me share with you that since about 2007, when I've looked at the numbers, an amount of nearly $5 billion of natural disaster risk has been transferred by the World Bank for its member countries. And this has been in the form of both cat bonds and conventional insurance. In fact, the bank has had a key role in developing the cat bond market. In 2018, and this is a transaction I'd like to highlight, the bank pioneered the issuance of the first regional cat bond, creating a shared risk instrument. And this is important again to some of the points the Prime Minister raised, that it was a regional catastrophe bond. It created a shared risk instrument. The 1.4 billion bond provided coverage for earthquakes to 4 countries of the Pacific Alliance: Chile, Colombia, Mexico, and Peru. And I think you did, sorry.
No, go ahead, please. I was going to ask you, based on the experience of the CAT DDO bond and everything else the bank's done, do you think insurance, in the context of the bank's lending in particular, but also all the multilateral financial institutions and development finance institutions, is there enough integration? Does it, and bluntly put, does it provide value for money? Do you, whether it is leveraging donor funding, whether it is actually allowing for the payouts commensurate with premier, what is your take on that, both from where you are sitting and your extraordinary career with the State Bank of India before this? In your overall sense, where are we with insurance and development finance?
So, clearly, Vikram, if you think about it, in developed markets, the insurance sector plays a critical role as investor and underwriter both, to support resilience, sustainable development, and enable other investments. But the problem is that there is far lower insurance penetration in emerging and developing markets, and which these markets, in fact, are much more exposed and vulnerable to crisis. So, I mean, there is huge room, there is huge potential. Now, it is up to us collectively, together, in collaboration, to understand how we can best harness these huge resources which are available in these pools, how to harness and sort of match the supply terms with the demand requirements. So to my mind, I mean, if you think about what IFC has done, it has developed a growing business with international insurers through credit insurance. And if I recall correctly, global insurers have provided IFC with over $5 billion in lending capacity through programs like managed co-lending portfolio programs. I think, let me give you an example that this MCPP program has enabled private insurers to enter IDA and FCS markets with the kind of tenors which private insurers would normally not look at all, were it not for IFC being in the middle. And this insurance has been used to benefit 29 countries. So, again, through our CAT bonds and other collaboration, we have collaborated with the CCRIF as well as the Pacific Catastrophe Risk Assessment and Financing Initiative. But like you said, I think we've only touched the tip of the iceberg, and there is much more we can do. And I'll come back later in the conversation to some of the impediments that we think could be addressed to, facilitate this process.
Perfect. And in the context, I'm glad you raised the IFC deal with insurance recently. Building on that, maybe we'll hear a little bit more from you later on that. But I think this is a great segue to Denis. And so, Denis, you're on the spot. You're in the spotlight and on the spot. You as insurers are well aware of the physical risks of climate change. They were the first ones from the financial community, if I recall correctly, who started to talk about it publicly. I myself attended a session on global greenhouse gas emissions and the impact on business by one of your peers in 2002. So it's been around for a while. But an AXA CEO said a few years ago that the 4 degrees Celsius world is not insurable. The Prime Minister is saying 1.5 needs to be insurable. We heard from Anshula, they have the know-how, they have the network, they have the concessional money. I already said you have the risk management expertise, the deep pockets, and an unusual long-term view on risk that very few financial players do. So where do you think are the opportunities and the challenges for the insurance sector to support the public sector, not just to build back better after COVID, but to start to look at what will ultimately become an existential threat for us? So over to you, Denis.
Thank you, Vikram. Good afternoon or good morning, everyone. I thought that the Prime Minister of Barbados set out the scene in a way which couldn't be better. I'd like first to say a few words about COVID-19. As an epidemic, it was not out of range with the type of expected events that we had in mind. What surprised everyone, including the insurance sector, is the economic consequences because of the confinement. And the confinement had the systemic aspect. And clearly, as the Prime Minister said, it puts developing countries and developed countries in a very different situation. Because for developed countries, increasing their debt to fund the response to the crisis is possible because of the, I would say, the reputation of the central banks. And for developing markets, it's a very different situation. The ability to increase debt is very different. Having said that, climate change is not going away. And I fully concur with the Prime Minister of Barbados that a 1.5 degree world is what we can withstand at the maximum. And AXA and many other insurance companies have made a commitment to align their portfolio to 1.5 degree world and not to a 2 degree world. And for the Insurance Development Forum, which I chair, clearly climate change remains the #1 topic that we have to deal with. And this crisis has put on the spot the reputation of the insurance industry because we were faced with business interruptions that we couldn't insure because this was not a normal business interruption provoked by an epidemic. It was a business interruption provoked by administrative closures, and the economic impact is severe. So what can we do about it? First, remain focused on climate change because it's not going away, because the developing world remains underinsured. And that's the reason why, as the Insurance Development Forum, we remain primarily focused on making sure that the 20 countries for which we have signed a partnership agreement, a tripartite partnership agreement with BMZ and with the UNDP will effectively be put in motion. But also we are looking at our role as both insurers and investors. Anshula just mentioned the IFC's MCPP program. 6 insurers, among which Munich Re and AXA, participated in part of the risk sharing of this, the recent IFC's MCPP for SMEs. So we take a part of the risk. This follows a number of other MCPP deals where it was, on the contrary, we were on the investment side, and the protection came from a partnership with the Swedish Development Aid Agency, SIDA. So we are participating in this both as insurers and as investors, and we need to continue our work on protecting against climate change. If anything, one element that has been demonstrated with that crisis is the importance of risk management. This risk management is our business. We are desperate to see that so many infrastructures in emerging markets are not yet insured. This is one of the focus areas for us as insurers. We want to make sure that infrastructures in emerging markets are effectively covered. Anshula mentioned the necessity to continue to partner between public and private sector. Clearly, the underpenetration of insurance in emerging markets shows that these markets alone cannot get the adequate coverage, and we need public partnership, public-private partnership, so that a part of the premium is paid by donor countries or multilateral institutions. A good example of that is the crop insurance system in India, which would not have taken off without significant public money, but also requires the contribution of private insurers like AXA and others.
Denis, thank you. I'll come back to you soon enough. Meanwhile, I want you to think about using a phrase from, again, the Prime Minister's fantastic remarks about the science fiction nature of this. Is there something that the insurance industry can look ahead to? Because from all that I know, you have the best crystal ball, and that's backed by the deep expertise in modeling, modeling expertise and risk analysis that you do. So just keep that in mind. I'll come back when we start to discuss the opportunities and how to fill this huge gap and the room and the potential that Anshula also mentioned. But, and Christa, that's a heads up to you too. I'll get to you in a minute, but before that, I'm going to take a slight diversion to Ingrid and sort of acknowledge Ingrid, that Germany has been this great leader in terms of broadly climate change, but also in recently doubling your climate finance commitment to 4 billion euros a year. Germany has repeatedly demonstrated it understands the challenges of addressing climate change from a development financing perspective. And we continue to hope that, you know, COVID is not going to put this off track in any form or the other. But there are a couple of things I'd love for you to talk to us about. The Prime Minister, and let's avoid loss and damage. This is not the forum for it. I hear the Prime Minister, but I think what we want to do is see how, if you will, insurance. I mean, you not only are the head of an important arm within the German government, you were also the executive director, a member of the board for the World Bank Group for several years. Where do you see the role for donors in their role as shareholders of development finance institutions, pushing them in terms of providing donor funding, like we heard Denis say, in terms of making premium more affordable, and just your take on what it will take to ultimately fund and make the world resilient enough to address climate change. So over to you, Ingrid.
Thank you so much, Vikram, and good morning to all participants. And I would also like to express my sincere thanks to the Honorable Prime Minister of Barbados, Mrs. Mottley, for this really remarkable setting the scene input, which really is quite a challenge actually also for donors to provide the right response to the many challenges that small island development states are facing right now. The first thing I would like to underline, Vikram, I see that due to COVID-19, I mean, first what we try to make sure in the German Development Corporation system that we don't lose sight of the longer term risk, such as climate change. So although we have to deal with the immediate impact of COVID-19 on many, many developing countries, we see a lot of challenges in the health systems, but especially we see, of course, the impact of the confinement on livelihoods and the economies as a whole. we see the impact on the tourism industry and the income that is being generated for the public sector. So, but although we have to deal with this immediate impact, and we think that what is being required right now is a huge signal of solidarity with those countries that are vulnerable, that are poorer, and they can't afford really to spend billions and billions to recover. In view of this, Germany decided to create an emergency program of, in total of 4 billion euros. 1 billion comes out of our regular budget, which means we have reshifted programs that may actually now can't be implemented, and we have used this funding for an immediate COVID-19 response. But additionally, we have increased our development budget. 1.5 billion this year, and another, so to say, second recovery program is going to be implemented next year. So the immediate response, of course, concentrated on the health sector. But additionally, for instance, a lot of money is going to be implemented and invested into building up social safety nets. And the question, of course, is if now millions of US dollars go into these areas, whether we could actually do it in a smart way, bringing in other risks, the longer term risks, such as climate change, and making sure if we actually build up new safety nets, whether we could use in an intelligent way actually the capacity that lies with the private sector in view of the financial capacity, like in the insurance industry, the risk capital that can be put at the disposal of building up stronger protection shields for poorer people, or the knowledge that is embedded in the private sector. First, in shaping markets that would actually incentivize to invest into preparedness activity, into prevention, and in creating the right incentives for a clever mix of tools, starting from, for instance, contingency funding, but going also into the insurance sector and would try to mobilize actually the additional capacity that is embedded in the industry. And therefore I see a huge opportunity within, this very difficult times really, to build back better, in a sense, to do it in a more, in a smarter way than we have done this in the past. Germany is absolutely convinced that we have to exploit the potential that the insurance industry can offer to development. And of course, we have to do it in a way, as the Prime Minister underlined it, that it is, so to say, affordable, and that is just at the same time for countries that suffer from the impact of climate change. For instance, I give you an example. I think in the past we have overestimated the question of whether there is sufficient capacity to pay into insurance schemes from the very beginning. So I think it could be a very smart investment from the public sector, from development cooperation agencies, first to capitalize, for instance, sovereign risk pools, so that the premiums are, with respect to the cost, lower than without actually public support. But additionally, I think, and I'm very convinced that this has to be extended and scaled up in the forthcoming months, I think donors should take responsibility to pay for the premiums of insurance policies. And we have done so. Out of our emergency package in the fight against COVID-19, we have provided 20 million euros to the African risk capacity to cover the premiums for the forthcoming 2 seasons, to make sure that 20 million people actually are being under this protection shield of the African risk capacity. I think we should do more. I'm absolutely aligned with the points that the Prime Minister made in this respect. But still, I think it's a very clever investment if donors would go along this route. Because if we work together with the insurance industry, I think we can capitalize on their knowledge about risk modeling and prices. Can we convince finance ministers and economic ministers to invest into building up systems that would protect them against future residual risks that can't be actually covered by investing into preparedness activities and prevention? I think this is only feasible if we have a concrete measure of the price that it's embedded and compare it actually with the price of additional action to be taken. So we need a price tag for these risks. And what the insurance industry, due to its experience and the risk modeling capacity, they can exactly provide that this knowledge to better grasp what is the right strategy for each and every country to invest into specific insurance fields. And secondly, we think that if we provide €1 and through the, so to say, the working together with the insurance industry, we could actually capitalize on the risk capital that is within the insurance industry, we can actually build up a protection sheet that is much, much bigger. So this is exactly at the core of our tripartite arrangement. The insurance industry is going to provide this knowledge, the risk capital, and UNDP and the German Development Cooperation Agency is going to provide the political outreach, the public subsidies that are needed in order to actually recreate markets that are fit for purpose and can also reach the poor and vulnerable people. And at the same time, we can make sure that the systems that we create are actually compatible and can be implemented on the ground. This is the type of work that we, alongside with the insurance industry, can bring to this joint endeavor. It's fairly new. Some people think that it's perhaps too risky, too complex, not doable for countries, perhaps least developed countries. I think we have started to work in so many countries, and what it shows actually in those countries where we have built up insurance schemes at the micro level, at the meso level, or even at the sovereign risk pool level, is that actually it has shaped a new work of working together. Countries or institutions are obliged to prepare emergency plans. They have a better knowledge about how do I reach actually people that are in country, are in rural areas. What does it take to, what do I need? What kind of institutions do I need actually to reach people that are in need? And we as donors, we have a better, we think that we build something that will last. What matters most for countries is really that you have a system in place that can provide you with a certain level of resilience. Countries like India, was mentioned by Denis, or Bangladesh, who have invested in the past exactly to build up these type of safety nets or insurance schemes, were even much better prepared when actually the pandemic hit the country. So you see a certain level of institutions and preparedness can help you actually to overcome an immediate hazard or even be better prepared for the longer term effects of climate change. So we consider this a win-win opportunity, and certainly we see a lot of areas where we could actually develop more insurance products and could bring along more donors. By the way, actually, we have already reached out to some donors, such as Great Britain, for instance. We are co-funding a facility, a multi-donor trust fund under the roof of the World Bank Group, doing exactly that, actually, market development for new climate risk financing tools, including insurance schemes. And we are developing new ways to specifically address the issue that was raised by the Prime Minister, to lower the cost and to cover the premiums so that we can really, so these schemes are affordable for many more countries and for many more people.
Ingrid, that's fantastic. You touched in the last closing bit, you touched upon working with the UK. I want to come back to you later about leadership across a lot of the other countries. I want to explore that a little bit with you. Hopefully time will permit that. I'm going to go to Christa, but I want Anshula and the Honorable Prime Minister to be thinking about a question that comes up repeatedly. Donor dollars are scarce. They're, yes, $1 in resilience can save $7 in the future. Leverage is an issue always. Anshula, I think you will have an opinion on that because it is scarce. If there was unlimited, we'd put it in insurance, we'd put it in everywhere else. We know the insurance industry, based on what Denis said, would like it. I'd love to hear from both of you in a bit as to whether, if you had a limited pool, what would you want to do with the donor dollar, given that it's not unlimited? But for now, I'm just going to turn over to Christa and give her an opportunity to talk about, and Munich Re is a leader within the insurance industry. We've heard about the cat bonds. You have natural catastrophe expertise. You make this available. You have a large balance sheet. But we heard from a vulnerable sovereign. We've heard from a donor government. We've heard from the largest development finance institution and a peer from the insurance industry. So, Christa, what the Honorable Prime Minister said, your insurance isn't large. I'm reading from my notes, large temperate places, and in my words, out of touch. I'm sorry to sort of leave you with this. Talk to me, talk to the rest of us about how the insurance sector's insights can help reward resilience, can leverage donor dollar better, can scale the insurance solutions you're already offering. No pressure.
Vikram, thanks a lot for this, and hello to everyone. I'll try to give you all the answers you've been looking for here, but seeing that we've been shifting a bit from the COVID-19, so the pandemic risk that we've been seeing and experiencing, and some of us still are, and the natural catastrophe risk, we will have to make a clear distinction here. What are we talking about? So are we talking about natural catastrophe risk or pandemic risk? There is a role for the insurance industry clearly in both of these risks. However, and this is an important differentiation to make, the contributions that we can do are going to be very different. So as you are aware of that, there are several discussions going on in various markets in order to set up pandemic pool solutions. So I'll cover the pandemic topic first, seeing that there was also the request of the Prime Minister to think about the pandemic clause. Generally speaking, government-backed pool solutions are going to be an adequate way to tackle pandemic risk. From our point of view, we should be very honest with all of ourselves, because that's the thing when collaboration starts. We have to manage expectations, what the insurance industry and reinsurance industry can really do with regards to pandemics. So the financial ability to support a pandemic pool is going to be extremely limited. And you may wonder why that is, because you had spoken about the great balance sheet. Because there's one thing that is missing in the pandemic here that we have in the natural catastrophe space, and that's diversification. The pandemic we have seen is hitting us at a large scale everywhere. The lockdowns, the social distancing, the taking care of people in each of the governments is leading to the same actions. So what is our contribution and what can it be here? Clearly for the pool setups, it's going to be contributing by know-how and infrastructure. And Denis had also mentioned before, what we do as an insurance industry is by far more than just the risk transfer solution, but it goes also to what Anshula had been mentioning. It's the advisory piece. It's the structuring, how to manage it in the best way. So I would see the pandemic risk by far is far too large in what we've seen in scope and how governments are stepping in and basically investing here to be covered by the private insurance industry overall. There is not the case that we're not hit already, but it's basically within the life side, within the health side. You've already in the personal lines business providing a lot of pandemic coverage. But let's turn to the IDF main theme, climate change, natural catastrophe protection. What can we be doing there? Here, clearly, we can provide risk transfer and capacity, but also beyond here, the service offering goes far beyond that. So it's really in understanding the risk, and we've mentioned that a couple of times, the modeling capabilities, but also seeing, especially now, it's going to be being able to assess the impact of climate change. and which route we're going to be. No one of us knows the answer if it's going to be 1.5 or 2 or 3%, but basically we'll have to work in scenarios. How can we take that into account? And this is maybe more what we're doing. And if you ask me if I'm optimistic and how we can do more as an insurance industry, you've all mentioned great examples that I think show that we can do it. Some of them, to be quite honest, took us 20 years to get there. So we might want to speed up for the next few solutions, but I'm hopeful there. And I think the CRIF has been mentioned. The Caribbean Catastrophe Risk Insurance Facility is a great example for a successful public-private partnership here, I must admit. And if we could do more of that, that would be good. Here, what is the importance was really that it's immediate liquidity to the affected country. I was quite touched by what the Prime Minister also said. It's just minimal and we need to scale, and it's just sort of helping for a short period of time, and then we need to think ahead. But there are also other examples where it goes beyond the mere cash or liquidity. If you look at the public asset cover in Mexico, the all peril cover that we have there, known as Fonten to all of us, the beauty here is really beyond the risk financing. It's the governance and claims protocol that was taken up here for more efficient risk management for public assets. So there is another twitch, I think, to it all. And I won't repeat again because it had been mentioned as well as a good example by Ingrid, the Africa risk capacity. This is something where, again, it's more geared towards protecting the most vulnerable segments of a population. And these are all schemes that were developed together and with the support of the insurance industry. So I guess there's much more to do. And you all have mentioned it already. It's not one of us doing this. It's all of us in this together, creating a consortium, all being there. And this is really what we're trying to create with the IDF, matching all of us in one forum, creating these panels, having these discussions, but being honest with each other. Where can there be a solution by the insurance industry and where can it not?
And that is a perfect segue. We could carry on this discussion for a long time, but I'm cognizant of time. And I do want to, if all of you will indulge me, we'll sort of go through one short round of, I want to trigger some thoughts from you, but overall the idea would be how can, so let me start with the Honorable Prime Minister. And Prime Minister, forgive me, given the time, I'm just going to have a couple of minutes for each of you. If you've heard everything, feel free to react. But if you had to pick two things that you would recommend be acted upon that could help urgently close this broader protection gap. You have development finance institutions, you have the insurance industry here, you have donors here. What would the two things you would prioritize as your suggestions for the community to move forward with?
You forgive me first if I say that the most important thing is political will. And in the absence of political will, nothing is going to happen. There is a trap that middle-income countries have been caught in. We earn too much to be considered poor, and we earn too little to have leverage or to be able to influence the market in any way at all. And therefore, I almost feel that asking me about what the priorities are in the absence of political will is a form of asking me how to waste time, because we are continuing to say the same thing over and over and over and over. People want, and I understand that the facts must drive everything, but there are a lot more facts out there than we are recognizing. So, for example, I think that the climate people will tell you that they're probably trending towards 1.8, 1.9 degrees already with what has happened. So that the notion of whether we should be at 1.5 is an irrelevant consideration. Secondly, we are working now with Africa, the UN, United Nations Economic Commission for Africa, and PIMCO, and my own advisors, Whiteo and Professor Passad and myself. We've now approached the IDB, approached the IMF on a liquidity and sustainability facility to to improve market access for Latin American, Caribbean, and African sovereigns, and really just to be able to unlock liquidity and to be able to make capital cheaper. At the end of the day, we are borrowing at 4, 5, 6%. Developed countries are borrowing at 0 and 1%. They are going to give far more at that cost of capital than we could ever get, but yet we're the ones on the front line. So how do we, in the same principle that insurance is used to be able to create leverage, how do we create a liquidity and sustainability fund that is based on a repo market that unlocks further capital as a form of leverage? I would like to see some immediate action on that one, because we feel that the risk is borne predominantly by the private sector. It's already functioning in the developed world, so why can't it function in Africa, Latin America, and the Caribbean? Is it just that, you know, why not? But it probably needs to be anchored by the liquidity from one of the central banks of the G20 countries. So I go back to the political will that I started at. The issue of development finance institutions playing a role in helping to subsidize, those decisions are going to be taken by the governors of those institutions. That's, once again, political will. So there's a morality about this issue. And the last speaker from Munich put it well when she said, look, we need a consortium. We need an approach that involves everyone. The problem that I have is that a number of us are having, and I would really want to thank the organizers this morning. As I said, we had one in November, but the bottom line is, unless we move forward at the level of executive decision making, either in terms of the G20 countries, as well as in terms of the development finance institutions, the IFIs, the IMF as well, we're not going to see the needle start to move. Somebody has to give a signal that pandemic clauses and natural disaster clauses are also something that the market will accept. I think the private sector can move on that without having to wait on a signal from governments. And why? It makes sense. At the end of the day, what do you charge for? You charge for uncertainty. The premium goes up for uncertainty. Well, if I can give you certainty by telling you how we're going to have, what is going to happen in these events, then that ought to bring down some of the premium which you're charging me for uncertainty. But it requires, I believe, the insurance companies being prepared to say, look, we've studied it, we've looked at it, we feel that this can work, because even if you have that debt stand still for 2 years, at least the obligations and the liabilities are still intact in a way that they wouldn't be. And if you don't put them intact, then you trigger countries into to a serious fiscal crisis, which means that countries are just not going to be able to meet their natural obligations, in which case you're in trouble. So I feel that the ball is in the court of the insurance companies on that. On the other things, regrettably, I think we need political will, and I trust and pray that every one of us as human beings, when we leave our jobs, will recognize that there but for the grace of God goes I, and that we really, really need to push the needle on our political directorate on these issues globally. Thank you.
Read out the terms of reference, or the first part of the terms of reference of the consortium that Christa was already referring to. Ingrid, I'm just going to go out of order. I'm going to 2 minutes on this issue of political will, which the Prime Minister has highlighted again. Germany doesn't lack that, but as a leader, there are several recent dialogues that Germany has been co-sponsoring, and one of the emerging themes from that, and what they're concluding, is that there is a lack of political leadership on the, not just this, but the broader agenda. So how would you, as a stalwart and a leader in this field, and even on the road to COP26, propose having other donor governments and perhaps even MDBs get more involved and behind this agenda?
Thank you, Vikram. So first, in order to make this whole notion of building up resilience and using different climate risk finance tools and insurance in the insurance industry, in 2017 at COP here in Bonn, together with Widge, we created the so-called Insuring Resilience Partnership. And its members actually is the industry, the IDF is part of this partnership, the MDBs, the World Bank is participating, but also developing countries. And key purpose was actually to make the opportunities that we could actually seize by working together, as described, the private sector, the public sector, and international development organizations, to make this better known, especially for the promotion of insurance schemes. The partnership was developed, and since then we are working together with the V20, with the most vulnerable countries. They are co-sharing this partnership. And we have seen that now the literacy actually about what does it take actually to use insurance schemes and what is feasible, what is not feasible, as Christa said, has actually, I think this has gained now a different level of discussion. It's less about whether this is a good idea to implement, but much more about how do we get scale? What does it take actually to implement those schemes also in very poor countries? Have we covered sufficient risk? On the way to COP26, what I expect actually, because all people are speaking about resilience, and we see each and every year, each and every summer, how actually the climate change is impacting many, many countries. And the costs are increasing, and this again impacts also the economic recovery in many countries. I think we are going to see a discussion first about the demand side. What does it take to build up a type of incentive system by, for instance, subsidizing premiums to make sure that we gain a specific scale when it comes to insurance schemes? The discussion is already underway by a couple of donors that actually are looking into the opportunities and the possibilities to use insurance more broadly. The second point is about the fact that in many sectors, we haven't actually piloted yet what insurance schemes can contribute to increase resilience. For instance, in urban settings, insurance for infrastructure. We have to figure out, can we do better when it comes to microinsurance, especially for emerging economies? So I think there's still many, many opportunities for which we could actually develop good specific instruments and insurance policies. We have quite gained a lot of experience with respect to floods, droughts, coverage of SMEs, but it has been mentioned actually the hazards are becoming more forcefully and they are hitting more countries. We need to scale up insurance schemes more broadly. And thirdly, I think all people are now discussing about the utilization of social safety nets that at the same time deal with climate change. I think we are going to waste an opportunity if we don't bring in the knowledge of the private sector. We have to bring this knowledge about the long-term perspective and the risk modeling that is actually available within the industry, because I think then we can build up, invest in safety nets that are far better equipped also to deal with the longer-term risk. And I think these are the three main points that I see in the forthcoming months that are going to be further developed together with the MDBs, with the COP26 presidency, Great Britain, and other donors that have been in this field investing heavily over the last couple of years. Germany alone has invested $500 million since 2015 in insurance schemes around the world, capitalization of sovereign risk pools, micro-insurance schemes, but much more has to be done. And I hope that we together with Great Britain can really mobilize more donors to bring this to a completely different scale.
That's fantastic, Ingrid. And before I turn to the colleagues from the insurance industry, I'm going to go to Anshula briefly. And Anshula, just hearing what you have, what would you add to the mix of offer and asks, particularly what you may see as major challenges in terms of working with insurance compared to other financing options, and or the opportunities along the lines that Ingrid started to lay out?
Thank you, Vikram. I think Ingrid has very well laid out the opportunities at their macro level. I just want to touch a bit more on the micro side of it. You know, when we actually go into doing these transactions, what are the challenges that we face? And if, you know, participants here can keep this in mind as we structure these transactions. So firstly, you know, the complexity of the transaction terms and the costs, these are the two major impediments to more widespread requests from countries. The insurance instruments tend to involve complicated risk models, and many of our client governments are not able to, you know, evaluate them well. Secondly, insurance solution providers often offer custom-made proprietary solutions which prevents governments from price comparison shopping. And it's difficult then to ensure fairness and pricing transparency as we evaluate these products, and that happens even when an MDB is in the middle. Then of course, there is a generic problem of the need to make these difficult trade-offs between the comprehensiveness of the coverage versus the cost. These are difficult for most governments to make and are fraught with political risk. For example, a very comprehensive risk coverage product may be prohibitively expensive, whereas a more affordable product will expose the decision makers to the risk that coverage does not trigger when desired. So, our suggestion would be that when we are structuring these insurance products, the coverage should be based on relatively simple trigger conditions that are easy to understand and evaluate. For instance, it could be, which are things which are understood well by the government officials. They can be back tested and priced on similar basis by multiple counterparties so that governments can feel confident about the pricing. So, it could be products as simple as and straightforward as, for example, a government bond issue that includes an option for an interest payment holiday or a maturity extension if a trigger event occurs. So these kind of very simple hybrid products would be easier to offtake. And I think Ingrid's idea of donor support for paying the premium would be a great idea. But these would be actually in some ways facilitative steps. Whoever pays the premium, whether it's the donors or the governments, and if MDBs are facilitating in the middle. I'll stop here given that we are really running out of time.
We are, yes, and we are over time, but I do want to hear from our insurance industry colleagues, and hopefully the people will stay on. We still have over 100 participants, and I think this is fascinating. We could go on, but we won't for more than 5 more minutes. Denis, let me just turn to you before I go end with Christa. There's clearly a whole issue around greater education and awareness regarding insurance. People say that, but we're hearing this. I'm paraphrasing some of what I'm hearing Anshula say, the whole issue around complexity, cost, transparency, those issues. And so how do you put yourself forward in a partnership to offer? What kind of products do you think would work better to address the post-COVID world, and where and how we move to building this resilience that collectively is so much desired?
Vikram, I will not go into the product ideas or product details. I believe that everything has been said by the previous speakers. The Prime Minister mentioned political will. I believe it's key. I believe that persistency is key as well, because when we work with developing country governments, we need to have people that have a medium to long-term perspective in mind. It's key to design a proper solution. Ingrid has mentioned the Insuring Resilience Global Partnership that she has set, that Germany has set in 2017. This contributes greatly to the increasing education and literacy of the on the side of the developing countries. On the side of the Insurance Development Forum, with the tripartite agreement that we've signed with Germany and the UNDP last September, we see a lot more interest from insurance companies around the globe to participate in the country schemes for the 20 countries that we've agreed with Germany and UNDP. So there is a strong commitment on the part of the industry. I hear Anshula's comments on simplicity and transparency. Having said that, there are some countries for which there is not a huge appetite from international insurance companies. So one of the roles of the IDF is to bring additional interest from insurance companies into the fold. And I believe that there is a strong political will on the part of a number of donor countries, a strong political will on the part of countries like Barbados, but certainly others. and a strong will from the leadership of insurance companies. And we do it not because we expect massive profits. That's clearly not the case. This is part of our corporate responsibility investments. We are not doing this for free because we need to cover our cost of capital, but there is strong commitment on the part of the insurance industry.
Thank you so much, Denis. And Christa, I'm going to turn to you for the final word. What are you? What is your offer, if I may say, and put it like that? I'm going to leave it totally open-ended so that you can just pack your 2 minutes in as you will, in terms of partnerships, in terms of product offering, engagement, consortia, whatever pleases the mind.
There's so much one could say, but I guess not in the limited time here. But really what I want to say, it all comes down, it's a matter of supply and demand. And often we have the discussion, are we not supplying what is needed, or is it a lack of demand? Because actually no one is asking us to provide coverage in some countries, even though we are offering. So is it a lack of, and I think it was much better phrased by the Prime Minister, political will? So it's a question just of supply and demand. For me, the IDF is exactly that. That's why we've institutionalized, because this is our future platform where we're going to bring together the supply and demand and what is needed and what we can provide. And again, as a consortium, and this is going to make us much more credible. So I think this is the place to be, to really scale and change something in reducing the protection gap. And I would really like to listen to Rowan. Therefore, I just speed it up a bit.
You are so kind, Christa. Thank you all so very, very much for so candidly sharing your thoughts on what is working, what is not working, and of course, ideas on how to make it better. And with that, let me hand it off to Rowan Douglas, who is the head of Climate and Resilience Hub at Willis Towers Watson, and also chairs IDF's operating committee, for what his take on the discussion is, some closing remarks, and the way forward. Over to you, Rowan. Thank you.
Many, many thanks indeed. And obviously, we've all enjoyed listening to a great panel. I'd like to acknowledge Prime Minister Mottley, who's very generously spent her whole time with us over the last hour and a half. So I want to perhaps focus my conclusions and next steps on Barbados and the Caribbean, perhaps more generally. Obviously, we know that the Caribbean is at the sharp end of this challenge of climate, and obviously is also had to deal with perhaps some unexpected challenges related to the pandemic. But Prime Minister Mottley's intervention at the beginning, which was both an introduction but also a provocation, just also showed how sophisticated the Caribbean is in this area. Obviously, we know that it was the heart of the CRIF, which has been replicated around the world, but what Prime Minister Mottley has done with respect to the country's public finances in the last 2 years to frankly think like an insurer around the contingent liabilities that Barbados could face, I think is an object lesson. So I want to perhaps pick up on some of her points and finally sort of sum up with perhaps how we can help. So Prime Minister Mottley indicated that while the public finances were becoming more and more resilient to shocks in the short term, there were some concerns around the broader public and domestic and commercial sector in Barbados, as well as the broader long-term challenge of building resilience. And she also highlighted that these challenges were faced in the region as a whole, and the blue ribbon gathering that she indicated that she'd obviously hosted in November and was moving forward was very promising in that respect. What we heard after Prime Minister Mottley's speech was basically a set of ingredients which are there. The industry, I thought Ingrid's intervention was very powerful of how things have moved forward in the way that donors and G20 governments are now looking to support this activity. So Denis, if I may, I'd like to make a practical suggestion. We have an IDF steering group meeting. We have 2 per year. The next one will be in the margins of the General Assembly in New York in about 2.5 months' time. I think it's quite obvious that the Caribbean in general and Barbados in particular should be a focus of IDF attention as we move towards the COP in Glasgow in November next year. And over the coming 2.5 months, I would be grateful if the IDF with its partners, and as Christa indicated, they all sit around the table, can work with Prime Minister Mottley's office to see if we can prepare a project and program, which we worked through from September onwards, hopefully to provide some delivery in time for the COP. And frankly, to enable the Caribbean to lead the path that the rest of the world will have to follow. So, Prime Minister Mottley, I'd like to thank you hugely on behalf of the wider panel and the IDF for participating today and giving us this inspiration, but also provocation, and of course to all the other panelists for their input, and to everyone on the line. But we will not let this valuable panel go to waste, and the IDF is not there to write reports, it is there to implement and help make new things happen, as Christa highlighted. So thank you, Vikram. I hand back to you, but we have much now to do. Thank you.
Echo, sorry, did you want to say anything before we close out fully? Thank you for that.
Yes, thank you very much, Vikram. When I provided my opening, I'm sure you all heard when I said that Vikram will expertly guide us through the next hour and 25 minutes, and he has very delicately treated to the complexity of the issue that we are dealing with, the peculiarities of small island states, but also a recognition of the challenge that other countries right across the globe also face. I also appreciate, obviously, Prime Minister Mottley, your presence here today. Anshula, as the head of the CFO and Managing Director of the World Bank, your very candid views on what the challenges are, but also what the opportunities are. Obviously, Ingrid, again, her fantastic intervention in terms of the role of donors within this space, and also a very clear signal that there is a willingness to engage politically, right? And in addition to that, also Christa and Denis for demonstrating that there is an appetite within the insurance industry to engage. We have the platform of the IDF that will allow us to bring these parties together in a transparent and open way to define how or the kinds of solutions that we actually need to be deploying to address the significant vulnerabilities that we face. And so as Rowan had mentioned, I'm really optimistic coming out of this. I do think that there is a lot of political will, and we can now take that political will that's been generated in this collective to drive tangible action. And so again, I'm thankful to all of you for taking the time to be here, but be assured and guaranteed that we will come back to you for more and your inputs going forward. So thank you for that, everyone. And thanks to also the participants who have dialed in from, as I said, right across the globe. Almost 200 people have called in right from different corners of the globe. So really thank you for making the time. And I hope that it also demonstrates that there's an appetite to understand more about this topic and to do more. So thanks everyone for your time, and all the best.
Thank you.
Thank you, everyone. Thanks.
Bye.
Thank you. Bye-bye. Bye. Nice
Bye-bye.
meeting you, actually.
Nice meeting.
Thank you. I look forward to working with all of you.
Thank you.
Yes.
Thank you,
Bye.
Prime Minister. Thank you.
Bye.